Good morning and welcome to the second episode of our Market Mondays podcast. This is Ashley and Josh from Parkstock Realty, Team Mangini.
And we're super excited today because we have a special guest.
But I do want to go over a couple of things before we bring her on here. For anyone who missed last week's podcast, we just went over some things that we're going to talk about here in the near future and kind of going over what is going on in the market today. As of right now, houses on the market, the residential listings that are active is only 274 and probably still getting lowered by ones going under contract. So
I think that's still a few more than last week, right?
Yeah, well,
not by much.
I think a few more maybe after the holidays. And we'll hopefully be getting into a busier season coming up soon. More houses will be hitting the market. So that's something that if you have any questions on or want some more information on that, definitely let us know. Today, our special guest is going to be Michelle from TopMark Federal Credit Union here in Lima. Hi, Michelle.
Can you hear us?
Hello.
Hey,
Michelle, how are you?
Good. How are you? Sorry, this was not set up at all.
It's all good. Hey, thank you so much for doing this with us. We appreciate it.
No problem.
I'm Josh, by the way. Nice to meet you.
Hi, Josh.
What branch do you normally work at?
The Cridersville location.
Okay. You're normally over there. Okay. Well, how long have you been over there?
We actually just moved here a couple years ago, but I've been with TopMark for 15 years or so.
Oh, wow.
Yeah. That's a pretty new building over there, isn't it?
Yeah. They redid it and everything. Yeah.
Okay. So I'm sure you've seen some crazy ups and downs and everything possible in those past 15 years.
Oh, yes. Yes. It's always like a roller coaster. You got your ups and downs for sure.
So how long have you been in the business?
Before that, probably like 17 years then, 17 or 18.
Okay. So you definitely have your experience.
Yeah.
Well, to kind of get started out, we can just talk about maybe the different loan programs or products that you guys offer at TopMark, just to kind of an overview.
That'll work. We offer basically almost every loan, which is nice because if somebody comes in, we can direct you one direction. If that doesn't work, we can always switch the loan product. So sometimes that helps. If something happens that was unforeseen, we can just say, all right, well, FHA will like you, or whatever it is. So we have regular conventional. We have Home Ready, which is a conventional product, but it's geared more towards first-time home buyers. So it's a lower down payment, lower PMI. Nice. We have FHA. We have USDA, which is a no money down product. Only certain homes qualify. And then we have the VA loans as well.
Perfect.
Oh, that's fantastic. That's a lot of products.
Yeah. So we have them all.
So now, obviously, only certain people are going to qualify for certain loans. Like you were talking about a moment ago, how, sometimes you might have to move somebody from one product to a different product.
Correct.
So what are some things that, help you determine whether or not one product is going to be better for somebody than another?
Credit score is a big one. Job time sometimes. And then, of course, their money down or their reserves or how much they have left. Some products want you to have more, left over after the transaction is completed than others as well.
Perfect.
Good stuff.
I know when you and I worked together, we used some of the community programs that we had, including WOCAP. So you want to tell me a little bit how you work with WOCAP and how that kind of works?
First of all,
WOCAP is a separate grant that you'll go through a class in a series with them. So you'd have to speak to them about how you qualify. Just know I get a letter from them saying, hey, they got a grant for this much money. You then use that grant to close your transaction. So we'll use that funds. You don't bring your own money. Well, with them, you have to put down $1,000 of your own.
Right.
But then you can use your grant money with any product. So we do the loan and they do the grant.
Perfect. So I know Michelle and I actually had done a deal here a couple months ago for one of my clients, and we worked really hard to help that client out and get those funds. And Michelle really worked hard, and I appreciate all that she done.
Yeah, sometimes you got to go around it, but yeah.
But realistically, I know with a lot of changes, obviously interest rates are lower, but I know there has been some, like what we say, tightening of the purse strings. So
Yeah.
have you guys kind of risen your like credit scores that are needed for these loans? What does that look like?
FHA is the only one so far that's really changed. When it first started, it was higher at 660, 680. They did lower it back down to 640.
Okay.
But you can still get conventional financing with a 620 in some cases.
Right.
Conventional doesn't just look at credit scores, so that gets a little tricky, but the correct answer would be 620.
That's actually something I was going to ask you about too, because I know it's obviously not just a credit score that we're looking at here. So can you tell us some of the other things that people need to be looking out for?
Job time, and then specific what kind of credit you have sometimes, and how long your credit is. And if you're just co-signers on all of your credit, they look at all of that to see which loan product would work for you. Typically, FHA is the easiest and to get approved for,
Sure.
But since we have that higher credit rating in there now, it's harder.
Yep, that's exactly what it is. I know sometimes too, is this something that you look for, like the loan to what is it? The loan to income to debt ratios, like how much debt you have versus income.
The ability to repay a mortgage is huge. With COVID, before COVID, it's a big part of the factor. So I do have people that call me and they're like, but you approved my friend for way more than you're approving me for. Well, your friend doesn't have a $600 car payment. Like people don't understand. Right. It's not how much you make. It's what you already have spoken for. And that's how your debt to income is figured out. Most loans are at a 44% gross max. So if you take your gross income, figure out your 44%, that's where you should be, including your new house payment. Now, FHA will go a little bit higher. USDA and VA want you a little lower than that. So but that's a good guide to kind of stick around the 44 to 45%.
That's good info. That's really, really good info. I think a lot of people are going to get a lot from this. I'm curious. Now, obviously, and during the past 10 months, a lot has happened. We saw interest rates come down, and then, like Ashley was saying a minute ago, there was a little bit of fluctuation. But you say everything's kind of back to where it was. But what else do you see that's really affecting your business right now that wasn't really a factor, 10, 12 months ago?
We need a pay stub every time. It's annoying, but
that's what I've heard is more documentation, more jumping through hoops, and
they're like, I just gave you a pay stub, but you're like, they want to see you're still working. And when it first kind of happened too, and what I don't know if it's every institution, but I'm assuming you work someplace where it's always overtime. You didn't work for 5 months this year. So your year to date on your pay stub, you're not going to qualify for the house that you qualified for last year. They're going to look at your year to date and you missed 5 months of work. So
I've heard some horror stories. Not anyone in particular, but of like how some people took, instead of working, they took the unemployment and then wanted to purchase a house. And so many people just didn't understand that unemployment is not income.
Mm-hmm. Yep.
So I'm sure that was hard for you too. I mean, you're pretty much asking for stubs up until day of closing. I mean, just about, right? I mean,
Yep.
I think there was a lot of misinterpretations with how unemployment was working, not just with that, but also with who's going to get paid for what, regarding their employer and things like that. It's been a crazy time.
So I kind of want to talk about, we've talked about a few items, but I really want to know, I know you said how busy you were. So just for comparison, seeing how busy you are now versus say last January, what do you think, how much of a difference is it from last year?
Really, right now it's the refis. They're bad. Everybody wants, today the 30-year is 2.875 on a conventional. So you can do a 10-year at 2%. We're having a lot of people that are going from a 30 to a 15 for the same payment. So of course people want to do it.
Oh, why not?
Yeah, why wouldn't
it just takes forever because purchases, we can still close those in like 11 days or so, but those are important. Those people have to close. The refis are closer to 35 to 45 days, if not a little longer, because it doesn't matter. Just keep making your payment and we'll get to you. But it just,
there's probably backup. There's probably a line. Yeah.
Everybody wants 2%. So that would be the biggest difference this year, is that there's so many refinances.
And you say that we were talking about that. We watched a lot of podcasts about how that's another reason why a lot of new homes aren't hitting the market. Instead of selling, people are refinancing. That's exactly what it is. With rates so low, if you don't have to move, why?
And with the rates so low too, I've had a lot of younger first-time home buyers, even for the first time probably in a long time, doing a 20-year or a 15-year when they buy that house instead of a 30. Yeah. If you can afford the 20-year, Yeah, because the rates are so low that the payments are very, very affordable. So they can get approved for way more right now if they're working and have been working. They can get approved for way more right now than they could have probably a year ago or 2 years ago.
Yeah, absolutely. No, we talked about it. What is the quickest you've ever gotten someone approved and closed for a loan?
We just had one a couple weeks ago that was 8 days.
Nice.
It's possible. It's possible. If the stars align.
If the stars align and you have a good borrower, what some don't realize is if you're going to bring us everything that when we need it, you will close.
Absolutely.
If you wait 10 or 12 or 17 days to get us what we're asking you for. Then you turn it in and you're like, when are we closing? I don't know.
That's got to be the most frustrating thing.
Yeah. You're as good as the borrower is sometimes in some situations, for sure. And then other things are out of our control, of course. But
you can only do what you can do. And because then you have to send it to your underwriters and then hands are off. And
you don't know what they have on their plate that day. Right. Yeah.
So on the other side, I'm curious, what is the longest time it's ever taken you to close? Like through whatever happened. We
had one where there were so many title issues. Like title issues can be a problem.
Oh yeah, absolutely.
Court can be a problem if somebody lists a house that technically they can't sell it yet because the probate court's not done. Those would be the ones that we have to wait for everybody else.
Oh yeah.
It's not us. Yeah, those would be 60, 90, who knows? Whenever it's done. And then everything expires and you got to start over again. But
yeah,
that's why when anybody mentions that, I'm like, are you sure it can be sold?
And that's what it is. Yeah. Made it hard for you. So
yeah.
Well, is there anything that you want to add or maybe make sure that people know? I'm sure you get plenty of questions and, the same things over and over again. Maybe something that you want to let people know about you, about what
we do have. The Welcome Home program is going to start pretty soon.
Yep.
So the income guidelines are not as low as WOCAP. And you can use WOCAP with Welcome Home. So you can get up to $11,000 down if you qualify for both grants. So no PMI typically on those ones. Welcome Home will start. We don't know what date, but it's usually the first week of March.
Yep.
But with the first being on a Monday, I don't know if they'll start it the following week. I don't have that information yet. I don't have the income guidelines yet for it, but it's a $5,000 grant. If you make under a certain criteria, you use that money for your down payment. So a lot of people will call me and say, I just want the grant. Well, you have to get approved for a home loan first. We have to do the loan and then we give you the grant. Yes. It goes
buy the home first.
Yes. It goes with the loan. So a lot of people utilize it. It's a great program. Typically right now, if people want to start getting pre-approved, that's when you do it. You could actually start looking at homes come February, making offers and just letting them know I can't close till March or April, which isn't, like you guys know, a 45-day contract. They should be getting pre-approved now, not waiting and then finding out, I have to do all this stuff. The grant goes really fast.
Yeah, it seems like more often than not, people want to shop for homes. They want to see what's out there. And then, they call us and say, hey, we want to go see this. Okay, well, have you been pre-approved?
Have you talked to a lender?
Have you talked to anybody at all yet?
Right.
It's like the house.
And then some of them are shocked that, they don't qualify. But then I have also had those that I'm like, you're good. And they're like, what? Yeah, like you're fine. So they should always just call. We can do those over the phone and just give them ideas of what to do to get qualified. Some of them, it won't happen overnight. And that's the hardest part sometimes, but we do put them on the right track so they can utilize that any way they want to.
Yeah. I think a lot of people are just scared to call lenders. They're like, I don't want to be,
Don't run my credit.
Yes.
It's going to hurt my credit when it's already, it doesn't matter at that point.
I was like, you're looking for a house. They're going to run your credit regardless. So you might as well do it.
Right.
But yeah, anything else?
No, I don't think so.
Michelle, you've been a pleasure to talk to. Thank you so much for joining us.
Thank you, guys.
Hey, so if people want to get a hold of you, how can they find Michelle?
They can, I have my own Facebook, which is my name, and then they can utilize that. They can text I have a work cell phone, I have a regular phone, or they can just email as well, or set up an appointment. You can get a hold of me all different variation ways.
And if anybody does want to get a hold of Michelle, I'm going to put her information underneath below in this podcast. So if anybody has any questions, want to get a hold of Michelle directly, you can definitely do that.
Okay.
Perfect.
You guys have a good day.
You the same.
Nice
Thank you so much, Michelle.
Take care.
Thank you. Bye.
Bye-bye.
All right. So that was Michelle from TopMark. So if you have any questions, feel free to get a hold of her, or you can also ask us. We can help you get in touch with her if you're starting to look for homes and to start purchasing and wanting to get a hold of a lender. Definitely get a hold of us or straight to Michelle. Yeah. So if you have any questions about that, let us know. In terms of the future, we're looking to have another guest on next week. So stay tuned. We'll let you know who that's going to be. But yeah, until then, have a great week and we'll see you soon.
Mangini's make it happen.
Team Mangini.
Bye, guys. Thanks.